how do you think about digital payments in terms of G2P, P2P, P2M, and what is the play of interoperability and open protocols or specifications in making that happen? I think our experience in making some of these G2P payments or P2P payments, I'll try to share, and that may be hopefully useful. And as you strategize your either country level or a regional payment infrastructure attempt. So I know there's a live translation, so thank you for doing that. If I go too fast, sorry about that. Okay, you have to, I think. Not happening. Okay, so we might have to close the. Okay, you're going to do each of that slide? That may be hard. Okay. So I think what we are realizing in India, although even in India when we built, we were building initially, we were building it in sort of one system at a time. We brought ATM networks, interoperable ATM networks. We did RTGS, of course, from the central bank, doing that effort. Then we did some sort of push payments, what we call India, we call it IMPS, immediate payment. But it was just a push payment. It was not meant for merchant payments. It was just meant for remittances. Then we did identity. I don't know whether we spoke of that in the morning, but payments attached to identity. So because combining identity and payment gives a lot of combinatorial effect. It's very powerful when you combine identity and payments, and you can create. But what we were seeing is that we were targeting the same set of users. So what is funny is that different parts of the system was creating siloed payment systems again and again, and that was not creating the expected impact as a single coherent payment infrastructure would look like. And today people want all kinds of combinations, which is what we see. And almost always, mobile first is not even a question. Online, offline, India is also, while India is well connected, we still have many use cases that are needed offline. So we are still targeting offline. But will we create different payment systems for different purpose? Or can we imagine a more unified payment system that can manage different use cases on top of that? And we also have to think about India is also, we are very similar in that sense. Our per capita GDP and so on, very similar to African nations. So cost is a very sensitive topic in India. So we needed to be low cost, we needed to be convenient and so on. Very similar to what you would see. So I think the idea we were looking at, and this is very, very key, idea we were looking at is not to think of each of those payment use cases in silo. If you think of every such payment use cases in silo, you will end up getting 5 to 6 different payment systems in your country. And then you will wonder, how are they not talking, right? Because if you want to create that, what's called a network effect, and if you want to create a population scale, large scale impact, country scale and regional scale impact, you need to think about a unified infrastructure that can handle multiple payment use cases. And that's very, very key, including cross-border, I would argue, okay? So let's look at G2P. So G2P in India was a very carefully attached to our ID rollout. We rolled out ID, and by the time we were 10% into ID rollout, we were also rolling out bank account opening and G2P. Our central bank was very amenable or friendly in one sense and forward-looking to allow that sandboxed experiment. And we did that early experiment in 2012, 13 to see whether it works, how does G2P work, what is the last mile, where does the cash in, cash out happens, and so on. We went through that effort, but the result is enormous, and it just took off for India. And this is very, very interesting. that we roughly moved our about 1,000 odd programs or schemes, benefit schemes, all into what's called direct benefits transfer. So government has a mechanism, or employers or government or CSRs, everybody has a mechanism to send money to a unique individual directly at a low cost. So while it is very powerful, government is one of the biggest payer. It can also be used, by the way, for an employee-employer payment. Very interesting. Same rate can be used. And we have about 860 million people actually directly financially addressable. That means everyone has a unique identity to which money can be sent, like email address. So think about everyone having a financial address to which money can be sent. That boosts a lot of movement of money, and which is very digital movements of money. And of course, savings have been enormous for us, for obvious reasons. So when you think about G2P, there are 4 blocks, building blocks. Don't think of an app. Don't think of a solution. DPI, digital public infrastructure thinking, is not about thinking solution and app. It's about laying the rails that allow the ecosystem to innovate continuously. So what does the rails contain? G2P rails contain authentication and eKYC, ability for anyone in the country to authenticate themselves, do electronic KYC under your PML rules, all legally under the regulatory compliance, ability to open the bank account, ability to transact. So authentication is very, very key. Because if everybody does their own authentication, it gets fragmented and it's not unified. Ability for registries to come in. That means you need some sort of a mechanism for which to say who are these people, how do they get money to them. So various registries get formed. That's a very key independent building block. For you though, a lot of financial regulator, very, very interesting building block that India built is a financial mapper. We'll talk about that more. That financial mapper, or what we call account mapper, was very, very powerful, simple building block that allowed any sender, money sender, to not worry about which bank or a mobile wallet you have account with. I don't want to know who you bank with. I have a unique address to you. I will keep on sending money to you. You can move that address from one bank to other bank. So when you close a bank account, open a bank account, the sender need not know where you are banking. It's a very powerful imagination that allows the sender and the recipient bank to be completely unbundled and independent of each other. I send, the other side actually receives. And the intermediate mapper allows the routing of that to be correct addresses, right? That's what it's doing. And of course, we also made sure that without a cash in, cash out infrastructure at the last mile or first mile, depending on how you look at it, there's no use opening bank account and depositing money because people can't do anything with it. So India also had to solve that. But India solved that not by writing application. Our regulator and Indian Bankers Association, IBA, came together to create an open specification, technology specification that allowed the market to create EMV compliant equivalent POS machines, but identity compliant POS machines. So if you are implementing identity system like MOSIP, you can actually create a ID compliant machine that allows me to cash in, cash out. And if the industry can develop that, and industry gets commission and money to develop that, and that is much more sustainable way of doing it, rather than one device, one banker, one vendor kind of lock-in that you might otherwise find. And this is what our G2P infrastructure look like. So a little bit, not too complex. So we have various government programs, health schemes, education schemes, farmer subsidy schemes, various schemes run by various. This is done outside the banking system, this side. They all have an acquiring bank. So if I am a agriculture ministry, I work with one bank where my money is there, and that's my acquiring bank. And then That bank, we created an open specification and an architecture that allows this scheme to say, send money to identity number 1234. And this bank would take that instruction, pass it on to the routing system, and the routing system looks at the mapper, finds who you are banking with right now, latest, based on your priority, and send it to the customer side acquiring bank. Okay, this is acquiring in that sense, that is issuance, but this is a customer, beneficiary or recipient. So very, very powerful unbundling. And the whole thing didn't cost anything for India. It was mostly an open specification game. It was mostly a very, very lightweight intermediate infrastructure that allowed all the banks to now say, oh, I don't need to do much at all. All I need to do is to take this instruction, send money to 1234 identity number, and just forward it. And the other side, bank said, oh, I love it, no big deal. When the instruction comes to deposit money to identity 1234, I deposit that into that account. As simple as that. So we didn't have to bring, and this is another reason, we did not have to bring all the banks on day one. Very, very key. Very difficult to get everybody to comply together. We allowed few banks to join and few banks to join here, few banks to enable here, and the cycle continued until more and more banks joined asynchronously. When you do asynchronous adoption, it allows gradual takeoff, and suddenly you have everybody in the network. And then you see the full ripple effect, right, of that. And so the financial mapper is as simple as that. It's literally a 4-field registry. For India, it's 4 or 3 maybe at best, at 3 fields. That's all it is, and it is done under the blessings of central bank. And this is done by the switch provider. So our switch provider hosts the mapper, so they manage the mapper, and all the banks can route it using that mapping infrastructure. Very, very simple infrastructure. And all the banks who are in the on the network actually have access to that mapper. And it's hosted by the switch provider. I mean, you can have 2 mappers also, by the way. So you don't need to worry about who will host the mapper. You can even have competitive mechanism for multiple mappers around. This is okay. So this is very, very simple lookup thing. So think of that way. Then we went on to say, okay, what do we do with P2P and P2M? Because you can't use the same. Can we use the same infrastructure? So we came up with a very, very interesting way to approach this to break the silo. And this silo is a very, very classic we see even in India. We had mobile wallet companies created an entire silo. That mobile money, mobile wallet. Banks guys created their own. Then the card companies have created their own. ATM, and as an end user, I'm saying, what do I do, right? I can't, it doesn't seem to scale. Everybody is doing little, but nobody's collectively, we are not able to see the powerful movement. So this moving from this architecture to a unified architecture was exactly what UPI did. I'll show you what that architecture very simple was. And India, when we launched UPI in 2016, it's equivalent to PIX in Brazil, roughly equivalent to small nuances, no big deal. Basically what it did, it unified using one protocol. One single UPI protocol was handling P2P, P2M, M2M, P2P, all that use cases that we almost always find it difficult to merge. We actually merged that use cases. We launched it in 2016, and last month we did 10 billion transactions. That's what we did in 6 years. So, because again, it's a network effect. So the real question we have to ask ourselves is that instead of silos, can we create network effects? To create network effect, internet-like effect, what do you need to do, or what do I need to do so that incentives are aligned? Because market incentives have to be aligned. Otherwise, they won't join the network, right? So it's a very interesting play, and we are learning. It's not that much. Of course, we have political difficulties, existing incumbent difficulties. By the way, there was no fund when UPI was launched. 2 largest incumbents fought it. Okay, there is no. In this room, I can tell you all that. Okay, it was not easy at all. They said we are going to kill it. They lobbied the hell out of this to kill, because they said why would I need it? I am the incumbent and I am the biggest player in town, right? But our central bank really believed that we need to push a more unified agenda. And we said, no problem, you don't need to join. Exactly was the answer. Reserve Bank of India, Central Bank told the big guys, don't join, it's okay. We will, eventually they came. The reason why they come is that you have to believe there are always challengers. There are always fintechs and small banks who are hungrier than incumbents. When hungry start people moving, when you see people transformation on the ground. I hope tomorrow you get, I think tomorrow you're going, right? I don't think tomorrow they're going on the ground. So you will see when the people's movement start happening, the bank is no more playing a political game, now they are opposing the people. Because people are asking, why are you not giving me a QR code based payment? I'll move my account somewhere else, right? So people start putting pressure back in the bank. Instead of central bank keep on whipping, saying that you shall join, which doesn't work all the time, right? So our central bank took a very interesting move, saying that it's optional. UPI even today is optional for banks, not mandatory. But we have 350 banks eventually joined, including mobile wallets. Everybody joined. Because that once the snowball effect starts, there is FOMO, fear of missing out, right? Everybody has the FOMO problem. So your real job is to create FOMO. I think it's very interesting, a regulator's job is not to create FOMO, it's to regulate. But sometimes you have to market make. So market making, sometimes you can partner with interesting teams to do that, right? And UPI this is slightly simpler representation of UPI. UPI has a 4-party model, but this is 2-party being shown, and that allows instant movement of money. But I think the few smart things we did, because of our unified understanding of financial address, we created something email-like financial addresses, which had nothing to do with the bank. So my financial address is not necessarily attached to the bank. I have a bank account behind the scene and I have a virtual payment address, which is basically an email-like address that allows me to make portability of my bank accounts. Very interesting. You want to ask a question?
Yeah, sure. No, because this is important. I mean, this payment account, that's how it's
Yeah.
How is Aadhaar underpinning this?
No.
How do you make sure that uniqueness is there, or does it
Not required. Okay, so in the unified payment interface, Aadhaar is not at all needed. Aadhaar is an option. So send money you can send it to an identity number, you can send it to a bank account number, you can send it to a mobile number, you can send it to many destinations, wherever stored value destinations, okay? But really Aadhaar number is not mandatory at all, because there is no need for unique, people can have multiple accounts, multiple bank accounts. I can have a mobile wallet account and a bank account. I might have a salary account, maybe a government benefits a separate account, right? You could have multiple accounts. But when you open the bank account, we used Aadhaar. So that the CFT AML part is taken care.
But eventually it is linked to a person. And that person needs to be unique.
Absolutely. So the account opening time we used Aadhaar to ensure the KYC norms and the real person, being real person, is verified genuinely. But for transactions, we don't need it. Because transactions are like scan QR code, high speed payments, right? Yes, please, yeah.
In case I have a wallet, a mobile account, a bank account, a microfinance account, is it the same name, or can I have several names?
You can have multiple names. Yeah.
Multiple.
You can have multiple, or you can have one name and then
Link it to
multiple. Depends on what the application is allowing you to do. So we have fintech applications, payment applications, variety of payment applications. If the payment applications allow you to do smart routing and all that thing, you can have one address, multiple accounts, but typically people tend to have one address, one bank account. Yeah. But if you have multiple bank accounts, sometimes you have multiple addresses. Technically, that's actually independent. And this goes back to, again, I think the aiming for interoperability. And when we did UPI, and this is very, very key, and Sanjay was part of that definition, we assumed UPI does not assume bank account. It assumes any stored value account. So we generalized it. Said there is no particular reason why only bank account should be allowed. So account got generalized. We said any application can be used, any mobile application can be used. Today we can do UPI on an ATM. By the way, I can use UPI to withdraw money. No card. I can scan the QR code on the ATM, money comes. Very powerful. So, because your mobile becomes the ATM card in one sense, right? That's you becoming the authentication factor. And with mobile go everywhere, now it's very powerful mechanism for to reimagine that possibility. So we said any application can be used to make payment or receive payment. You don't need separate application. You can actually create any payment device or a mode. That means you can have a smartphone based payment, you can have a feature phone based payment, or a kiosk, like an ATM kiosk like payment. The underlying infrastructure is exactly same. So the device by which you use the payment is irrelevant when you design the architecture correctly. And most importantly, recipient. We said we don't need P2P separately from P2M and G2P and so on. Any recipient to any sender to any recipient, right? That's what we did. And this abstraction really allowed us to unbundle the governance standards, management of money. In UPI, money never moved out of the banks to fintechs. Money remained in the banking system. But experience went to fintechs. Payment experience. So we unbundled the experience from money. Normally, otherwise you are stuck with money and the bank and the app, everything is provided by one entity, like banking entity. And that is difficult. Bankers are not well known for the best experience. Now sometimes they find it hard because they have to manage a bank. And they may not be innovating as fast as fintechs out there. So how do you use the evolvability or the agility of the fintech, but not manage the money securely in the safety, right? So money stayed here, user interface got unbundled from the money, and that was very, very powerful move as well. We can study that later when you look at it. So we brought these things together. An upgraded payment protocol called Unified Payment Protocol, an interoperable QR. QR was very key because smartphones were everywhere, and camera is cheap because everybody has a camera. You just click one, right? So camera is everywhere. Think about it. That power of the camera is huge compared to POS machine or a card machine, right? And interoperable authentication. We even standardized the interoperable authorization of payment and authentication. That allowed us to this combination was so brilliant that any bank, any fintech, any device, any type of payment at one shot. Now, it didn't happen that first year. First year it was very challenging because who will come, what use cases. We started with few banks, only P2P. So people said, okay, really, it's uninteresting. But next year we added a central bank allowed P2M. Then the next year we allowed recurring payments. Now next year central bank slowly, steadily allowed one by one, it opened up. Now today we have 10 billion transactions because of that, right? And that power of the generalized protocol, payment language, was the essence of UPI. Okay? This, I will share the decks, I think, with many of you, don't worry about it. And I think this was very key to think about it. Okay? So, question we were asking also is that, does it mean only one switch? Multiple switching companies? While India happened to have a one switch, which is a not-for-profit entity called National Payment Corporation of India, under the blessings of the central bank, sometimes you have multiple switch providers. But how does multiple switch interoperate? Nothing wrong in multiple switch providers. Let them compete. A little bit of competition is good. But interoperability, sacrificing interoperability creates silos. And silos doesn't scale. So I think create a unified protocol but allow multiple switches, multiple banks, multiple fintechs, multiple players so that there's competition but interoperability. Otherwise, sometimes you tend to do one silo and another silo. So interoperability is the real essence of what we learned here, what we can do. And that is also, we extended to QR code. We were seeing this also. When you walk into a merchant, you have 4 types of QR codes. And people are saying, oh, this one I pay this, okay, I pay differently, different app differently. And we in India, we went away from that. We went away to a unified QR code. It doesn't matter which app you use, which bank you use, which merchant you are on. The definition of QR code was standardized. QR code was provided by private players, but the definition of the QR code was standardized. And that was something like this. Very, very simple specification. That's all it took for us. Very simple specification, converted into a QR that allowed the ecosystem to paste this QR everywhere. So we have suddenly 266 million QR codes, merchant QR codes now in India, right? We have 5 million POS machines. Think about it. Card machines has 5 million. We have 250 million QR codes, which is receipt. We can make payments. So suddenly, QR code and camera allows you to free yourself from the lot more constraints that we traditionally had in scaling. But you still cannot outsource interoperability. Interoperability is very much an essence of this. It is also the reason why the same unified payment interface in India, same architecture, same digital rails, also used by feature phone users. We don't have a separate payment system for smartphone users. Smartphone users, feature phone users, no phone users, all use the same payment rate. How do no phone users use it? Using their fingerprint, using our ID. For the people who have feature phone, how do they use it? Through voice or dialing, USSD. What do smartphone people use as an app? But same, money movement is money movement is money movement, right? It doesn't matter. If you abstract it enough, you actually get it right. And that's what exactly happened. So we just are launching a voice call as well. This year we are going live with voice calls. Okay. And we are quite large. So you can imagine from one extreme to a completely new extreme. Literally all under the same rail. What is different in India, I think very important to study, is that when new innovations were launched every year, the underlying infrastructure did not change. The central bank laid that infrastructure once, and many new cars were formed. Highway was one. Many new forms of vehicle were coming. And that innovation, unbundling that innovation from the infrastructure is the essence of what you are trying to do, okay, if you want scale. And of course, it's obvious, it drives formalization, because when we push from digital payment from less than 50 million people doing digital payments in 2016 to 500 million people doing digital payments today, what it also meant is that the formalization of the society happened. They are all in the formal system. They all have a digital footprint. They all have bank account. Now they are lendable. Now they can do a lot more financial services on top of it. That, going from a dark side, whatever, informal, fragmented, parallel economy that India used to have, India probably still has, much of that is being formalized and part of the digitization. So it's very, very important that I'll end with this. Never think app or platform, because that is such a constrained way of thinking. Because you think you know how to build this app and platform. Think networks and protocols. So protocols and networks allow a lot more freedom to evolve into the future, allowing many apps to thrive, many user interfaces and workflows to happen, rather than thinking platforms and apps right now. Okay, that's the only thing I would leave you with. Okay, thank you.